Now, I do want to bring in Rick Fier of Conifer Securities. That's an equities trader for over 15 years. And Rick, you say, we're going to talk a little bit about the flash crash. Let's start there, because I have so much to talk to you. Sure. Was the worst day in your history of trading? I mean, how bad was it? You were living it. Yeah,
it was just a horrible day. I mean, if you go back to the 2008 crash, that made sense. You know, we came in, the market went down 800 points. The next day went down 800 points. You had time to react. You had time to understand what was going on and you know, think it through. The flash crash was the opposite. You know, it was a bad day. It wasn't a terrible day. It was a bad day. And then all of a sudden, 15 minutes, stocks go from 33 to a penny.
It's wacky, right?
Procter & Gamble goes from 63 to 40. It didn't make any sense. As
a trader, are you worried that it could happen again, despite all the regulations and the circuit breakers and all these, you know, different technology methods that are supposed to be coming in to kind of prevent that kind of thing from happening? Do you think it could happen again?
I definitely think it could happen again. And that's why sometimes, you know, in the morning I'll throw in a bid 50% below the market in some large cap names, because if it does, I'd like to participate.
You really do play it that way?
Yeah, why not? I mean, I have a couple of minutes to throw in a couple of bids, and if I get hit, wonderful. I'll sell it at the end of the day and make, you know, 40%.
If you're lucky.
Yeah.
Rick, I wonder what you think about the concern that there are too many computers trading. It's become less popular, but you still have a lot of high-frequency trading going on, and the fact that there just aren't enough guys, there are not enough specialists doing the job that they have been doing for the last couple hundred years here on the stock exchange floor.
I mean, I completely agree. I think the floor is an amazing place. It was an amazing place, and if there was a specialist down there that day in Procter & Gamble, you know, it wouldn't have gotten to 40, because he would have said he would open up his checkbook at 50, 55. I'll buy everything you have for sale. I'm not scared. I understand what's going on. But once the computers take hold and you have stocks go from 33 to a penny, I mean, as an investor, I mean, I've been doing it for a long time, and it doesn't make any sense. You can't equate. You can't say Procter & Gamble's worth 63 and then it's worth 40 and then it's worth 60. So is my money, which is real to me, what is it invested in?
Right, right. Hey, listen, I want to talk a little bit about today, because I think, you know, it's interesting to see how the market traded. We were up, what, 175 on the down at the highs. We've come well off that here at the close. Still a little bit of a gain. Yeah. But what does that tell you about, you know, we heard from Scott Shelley saying, you know, the street really needs to believe it. Do you buy some of the optimism that we've seen in the economy?
Oh, I definitely buy the optimism we see in the economy. I think today was, I think the last couple of days you kind of have to remove yourself from the market, because there's a lot of other things going on. So this morning we came in, great jobs report, saw a flood of covering. That's how we hit the highs. Once the covering was over, we started pulling back in, because this week has a lot to do with the computers at work, margin clerks at work, people getting squeezed for cash and having to go somewhere to sell it. Yeah, and I mean, it started at the beginning of the week and it ended at the end of the week. It can't give us another, like your other guest said, another week to absorb everything, and I think tech is going to lead us higher.
You know, everybody talks about tech. I mean, why is it? Just because, what, capital expenditures and so on and so forth?
Yeah, and then the dollar plays into it, international, emerging markets. I mean, the one great thing to remember this week, I mean, I think yesterday was the best day of the market, because that's where we really saw the crack in commodities. We sat on our desk. We were more worried when you see silver going parabolic, when you see oil going parabolic. That's scarier, because that's going to really squash growth.
Right.
But now all of a sudden you see everything come crashing down. It's going to be good for the emerging markets. It's going to be good for everybody that sells into the emerging markets.
Right, right, exactly. Unless you're long on that.
Well, yes, of course.
Today we got news, I should say, of 244,000 jobs that were created. That's very positive. You have to go back to March of 2006 to find that same kind of number. It was 245. Meanwhile, GDP right now, in theory, the estimates are about 3.2%. Back then, it was 3.1%. In other words, the current combination of jobs and GDP looks very much like March of 2006. But the fact is, it feels so different. I mean, back then the economy was expanding and people were making money. This time around, it's just a very different story. So, Barry, my question is, when will things change? When will it actually start feeling the way it felt back in 2006? And most importantly, when are we going to start to create more jobs that will actually, or Rick rather, that will actually get the number on the headline much lower?
I think it's tough to say. But one thing you have to remember about investing in the market is, I mean, if we see a lot of people starting to get employed, which will be very good for the feeling of the country, it'll still add a lot of costs to the company. I mean, right now, if we just came through an amazing earnings season, which was backed up by another amazing earnings season. So right now, with the market itself, to me, it looks like it's in its sweet spot. It has its revenues are coming in and growing, profits are expanding. Apple puts up a ridiculous ridiculous number like they did, and now the stock is basing for the last 4 months. These are all positives, and remember, when everybody's employed and everything's good, that's the time to sell. It's this time when it seems like there's good value.
But as we heard from Scott Chalaty, you know, when people next to you, your neighbors don't have jobs or something, I mean, there's still that disconnect between corporate America and Main Street. So
yeah, and I mean, and that'll probably stay. Even corporate America, even we don't feel good. I mean, I come to work every day. I'm not a happy guy.
Well, that's a shame.
Well, I hear you.
We've got to work on that, Rick. Rick, thank you so much. Have a great weekend.
Thanks a lot.
Rick Fier, equities trader over at Conifer Securities.